U.S. private sector just lost over 33,000 jobs in June. And no, this isn't a headline from a recession year. This just happened in 2025. While Wall Street watches the Fed and inflation reports, something far more immediate just broke. The engine of the U.S. economy, its private sector, is stalling. Is this a fluke? A warning sign? Or the start of something much bigger? Let's break down exactly what's happening behind the numbers and why this matters for your wallet, your job, and the path of the entire economy. The latest ADP National Employment Report shows that the U.S. private sector shed 33,000 jobs in June 2025. This is a sharp reversal. In May, the same report showed a gain of 152,000 jobs. So what caused the swing? Here's the breakdown. Job losses were concentrated in manufacturing, construction, and transport sectors. White-collar jobs, especially in finance and tech, were flat or only slightly positive. Small businesses saw the steepest drop, while large companies slowed hiring dramatically. One report doesn't make a trend, but this is the first net private sector job loss since early 2021. It's raising eyebrows, for good reason. In the U.S., nearly 80% of all jobs come from the private sector. It's where growth begins, and where recessions start to bite. A 33,000 job drop may not sound catastrophic, but it's the context that's alarming. Consumer spending is already slowing. Business investment is tightening. Credit is harder to get, thanks to high interest rates. And inflation, while easing, is still above the Fed's 2% target. This job dip could be the canary in the coal mine. A sign that businesses aren't just hesitating, they're retreating. Let's zoom in on where the pain is. Construction. Home builders are pulling back. High mortgage rates mean fewer buyers. Fewer buyers mean fewer homes. Layoffs are creeping in across the board, from site managers to equipment suppliers. Manufacturing. Global demand is cooling, especially from Europe and China. Plus, supply chains are still messy. Many U.S. factories are seeing canceled orders and shrinking backlogs. Transportation and warehousing. Remember the post-COVID e-commerce boom? That's fading. Delivery giants and logistics companies are trimming routes and cutting shifts. On the flip side, healthcare and hospitality still added jobs, but much more slowly than in previous months. Here's the big debate. Is this a one-off, or is it the start of a broader slowdown? Some economists argue it's seasonal noise. Others say it's the long-delayed effect of the Fed's aggressive rate hikes in 2022 to 2023. But what's more telling? Consumer confidence is starting to dip, and corporate earnings reports are peppered with one ominous phrase: headcount rationalization. Translation: job cuts are becoming a strategy, not just a reaction. If you're wondering how this affects your life, here's the rundown. Job security. Hiring freezes are spreading. If you're in construction, logistics, or tech, keep your resume polished. Wages. Wage growth has been strong for years, but that may now slow or even reverse in some sectors. Interest rates. Ironically, this job weakness could convince the Fed to pause or even cut rates later this year. That means lower borrowing costs for mortgages, credit cards, and business loans. Markets. Investors hate uncertainty. Weak job data fuels fears of recession, so expect more volatility. Here's what to keep your eye on over the next few weeks. 1. The official jobs report. The BLS report comes out soon. If it confirms the ADP dip, that's big trouble. 2. Consumer spending. If people tighten their wallets, the private sector will hurt more. 3. Fed reaction. Will Powell pivot or stay hawkish despite the signs? Fourth, earnings season. Listen for hiring outlooks, layoffs, or cuts in capital spending. This is no longer about inflation alone. It's about confidence and direction. Final thoughts. A 33,000 job loss might sound like a rounding error in a $25 trillion economy, but it's often the small cracks that appear before the earthquake. If the private sector keeps shedding jobs, it won't stay quiet for long. It'll hit headlines, households, and the 2025 election cycle fast. Stay informed, stay agile. And if you want more clear, no BS breakdowns of jobs, the economy, and how money really moves, subscribe to Finance Related 101. Thanks for watching. We'll see you in the next one.